how we treat our planet and the way we think about it.
So while 2001 came and went without quite looking like Stanley Kubrick's ultimate space fantasy, 2021 might finally be the year we're catching up.
If you visit California, you might be inclined to go to Disneyland, or jump in your convertible and take Highway 1 up the coast, or maybe make a pilgrimage to Yosemite. All very fine choices. But if you're the kind of person who revels in our planet's extremes, then it's Route 395 that you're after. This one glorious road will carry you from Death Valley's desert floor to sky-high views of Mount Whitney. You can see the 5,000-year-old bristlecone pines, the oldest living organisms. Or the bizarre tufa towers of Mono Lake. And true to California's boom and bust spirit, you can saunter around the ghost town of Bodie. What a novel experience to find an empty American city where all the businesses are shut down. To do 395 upright, it helps to have a guide, and mine is a man named Jan. And his crew,
It's a mess back here.
Aaron
Let's tidy up first.
and Lemmy, the hardest partying dog of all time. Jan agreed to show me some of what 395 has to offer, but only if we agreed not to disclose any locations.
My name is Jan Srostra. I'm an industrial designer out of LA, and I spend a lot of time camping and a lot of time in the Eastern Sierra. It's a place I love, and sometimes I'm known as 395 North because my Instagram account, and I don't like to be known as that, but I'm trying to use it to set a good example and do more with it than just social media.
Where did we end up camping? We got here late last night. I wasn't even sure where we are.
This is BLM land, right on the outskirts of National Forest, and it's one of my favorite places in the world. Basically, everything outdoors wrapped into one.
Yeah. Good thing about California, man.
Oh, man. We have so much national forest and public land that you can literally just cruise out and find a place to camp. It's ours.
What I wish was mine is Jan's sweet truck.
It's a 2019 Ford Ranger. Has about 200 watts of solar in it and a fridge, and has everything that an RV has except for a toilet, but just on a smaller, simple scale.
And you drive us around day to day in LA.
Yep.
And then just roll out when you want.
It's my daily driver. Handles great. And then when I'm done with work, I can just bail and go camping. So the camper basically has only what I need. Think of it as backpacking with a car.
Yeah.
The fridge has a couple compartments. This is just a kitchen box, stove, utensils, and a bunch of stuff. This one has just dry food. Then when you get inside, there's a bed. The bed flips up, so you've got tons of room in here. This awning is phenomenal. If you want to pull that over. That's cool. Let me just pop that up.
Sorted.
So, home on wheels.
Yeah.
This is my vacation house.
Dude, it's so nice, man. Even with his nomad lifestyle, Jan faces the same big question as the rest of us. Do the internet and smartphones have to ruin everything? When you find the super special, beautiful spots, is that you busting out a map and like looking where it might be cool to go, or is it word of mouth and just getting to know people, the locals? And
if I see a dirt road, I just want to go down it. So a lot of it's just aimless rambling. It's a desire to just see something. Check that out. For some reason, it's more fulfilling than getting a recommendation from somebody. Or there's tons of apps and websites now, road trip apps, camping apps. They've proliferated. The knowledge is accessible on the internet, right? I used to fight the geotags, and I would get really pissed off. I'd be like, why are you posting this place? It's gonna blow up, it's gonna get trashed. Now I've realized that you can't fight it. The internet has just shrunk the world. So we're not gonna stop it. We're not gonna stop people from going there. So I'm a lot more focused in conversation now with trying to set a good example. When you go, pick up your trash. When you're pooping out in the wilderness, don't leave your toilet paper on the top. You know, make sure you follow, good steps for leaving no trace.
as a thank you for this quick guide to pooping etiquette, we made Jan, Heron, and Lemmy some tacos. And we all took in the night sky and knocked back a couple of drinks. Take that, Apocalypse. The thing about good times and serenity in 2020 is that they're fleeting at best. After we split up from Jan and continued on our way, smoke started to envelop us. The plus side was that our RV no longer smelled like feet. The downside was breathing. My man David here suggested that we try and outflank the smoke by cutting through Yosemite. Without a reservation, we had to talk our way in.
Yes, no stopping, no getting out, and
Yeah, don't go in the valley.
yeah, no problem. We just wanted to get through.
It was a beautiful choice, Glad we got out of the smoke. Whoa, okay. But not quite as effective as we had hoped. Fast forward 4 hours or so, and we had managed to trade the smoky majesty of Yosemite for the smoky, look at it, strip malls of the Central Valley. We have made it sort of out of the smoke, all the way across Yosemite National Park and here to the gorgeous Central Valley of California. We're off to see a kind of surprising tech startup that is making some pretty strange machines to serve all the growers out in this region. And we're here in this near Fresno. This is California farm country, right?
We're just south of Fresno, a town called Kingsburg. So we're right in the Central Valley of California. Very, very large farming valley here. It's kind of considered the breadbasket of the world.
The Central Valley stretches out over about 20,000 square miles, and the farmers here produce about 1/4 of the food that Americans eat, including a whole lot of fruits and nuts. Tell me a little bit of the background of Gus. I know some of this is like a family business. The roots of this go back a ways. Tell me kind of like how we got to what's essentially like a startup, I guess.
Yeah, definitely. So the founder of our company is Dave Crinklaw, and he started the business back in 1982. He started with is basically with his dad was commercial spraying of trees and vineyards. Got to the point where our biggest challenge was labor, just the shortage of it, really. He was forced into innovating, and he had this idea for quite some time about doing a driverless sprayer, and it finally got to the point where he said, you know what, I either got to get out of this business or I'm going to innovate.
Organic or not, crops need to be sprayed, and this process has to take place a few times a year. This means hiring a lot of people to work long hours under serious pressure. And so, just like the tech bros to the north, Gus decided to solve all of its problems with robots. On this like labor point, you guys have set this up where you can have somebody in a truck and that one person can monitor, I think like 8 of these.
In order to operate Gus, you have one guy or girl that sits in a pickup and they monitor from a laptop computer. So that person is basically just watching all the vehicles on the screen. They can monitor up to 8 of them at a time while they're out there spraying in the orchard. And so that user interface really provides them with all the information they need to make sure that the machines are safe and that they're doing the correct job. So it tells them what speed they're driving, the engine RPM, the amount of gallonage per acre that they're applying at any given time. So if any one of the machines has an issue, it's going to send an alert to that laptop.
Much like a self-driving car, these beasts use GPS, LiDAR, and cameras to see and navigate the world around them. They also rely on pre-built maps of the orchards for extra guidance. Gus builds the machines right here, and then takes them out for robot training on this orchard next door. It's here that the company learns if the machines will behave and do as their software and human masters command. So this is kind of like this is a test orchard where you guys put it through the paces and work on the technology?
Yeah, so this is our test orchard right here. It's right by our building, as you can see in the background. So every new machine, as it comes off the assembly line, it's put through a commissioning test right here. We test all the sensors on the machine, autonomous computer, all the safety systems, make sure it's doing what it's doing prior to when it's delivered to a customer.
So what's it doing now?
So right now he's doing a test spray. So he's just turning the water on to make sure that the system comes up to pressure, spraying water out of the nozzles just to make sure it's all functioning properly.
Okay. It's got like a crazy turbine at the back, or?
Yeah, so it's basically just a big fan.
Okay.
And that fan's driven off of the Cummins diesel motor, and it just basically creates a big airflow.
Gus is already selling these vehicles to brave modern farmers. And people the world over have taken notice of its machines. And have you just sold them in the Central Valley or like throughout the U.S. or even overseas, or where are they going?
Yeah, so right now the majority of our machines are here in California in the Central Valley. However, we do have machines and customers in Florida, in the citrus industry over there, as well as Australia.
And I think you started selling them in like December of 2019?
Yeah,
right?
So we started taking orders early last year for the sprayers, and the first deliveries we made were in December of 2019.
Okay, so. And how much do they cost each?
So our retail price on these machines is $285,000.
So it's not a small investment, but I'm sure the regular sprayers aren't cheap
Yeah,
either.
I mean, we're honestly not too far away from conventional equipment on our price, and the main thing is that the return on investment is very quick due to all the labor savings and the increased efficiency. I mean, these machines, they just thrive. But basically what we're doing, besides this machine, this is our first machine. We call it Orchard Gus, mainly designed for your nut trees, as well as citrus and fruit. In the future, we're working on a few other projects. We're going to do more machines. One of them is actually a vineyard sprayer. So vineyards are much tighter spacing, so the machine has to be physically smaller. And then we've got our eyes on doing a lot of other innovating.
That right there, friends, is a Central Valley farmer putting his whole fruit basket on the table. Gary's TED Talk can't be far off. And with that, it was time to get back in the RV and to confront what happens when three men are bested by their own failings and the forces of entropy. Next on Hello World, we cruise into the Mojave Desert in search of a lunar lander.
We have instruments that we are going to deliver to the South Pole of the Moon in December of 2022. Instruments that are trying to scan the surface of the moon.
And hang with a test pilot who walked away from this.
Meet Betty. She lives by herself, but for the last few months, she hasn't been alone.
LQ, tell me a joke.
Did you hear about the claustrophobic astronaut?
No.
Apparently, he just needed a little space.
Most technology isn't made for 93-year-olds. But this woman is making sure that this particular robot is.
LQ, who are you?
She's researching the way we interact with machines. And if she has her way, robots will soon be a trusty companion for all of us.
My name is LQ. How can I help you?
As technology replaces old jobs, it's also creating new ones. I'm Aki Ito, and I'm here to show you the jobs of the future.
Connection lost.
My name is Danielle Ishak, and I am a human-robot interaction researcher. It's really hard to intuitively design a robot meant for a consumer audience. You have to make sure that it's a robot that people want, people know how to use, and people value.
Danielle works for an Israeli startup called Intuition Robotics. Its U.S. office is here in downtown San Francisco. Hey Danielle, it's Aki.
Come on in.
The company is funded by a couple big names like Samsung and Toyota. Full disclosure, Bloomberg's venture capital arm is an investor too.
This is LEQ.
Can I take her out for a spin?
Please.
LEQ. Tell me what you can do.
I am a proactive social robot designed for older adults. I can connect you to your family and friends, and even play music.
These features might remind you of the Amazon Echo, but you'd be missing the point if you compared her to a smart speaker. She's not meant to just be useful. She's meant to be a companion.
Why don't you take a break and have a drink?
And that's why she has a head that can nod and make other subtle gestures you might expect from a pet.
Through our research with older adults, we're finding that almost on a daily basis, we see that somebody tells her that they love her.
Really?
Or that they like her.
Like,
or that they miss
literally,
her.
I love you?
Mm-hmm. They'll also tell her, I'm depressed, or I'm lonely. They'll open up to her in a way that they might not necessarily open up to a human because they don't feel like they'll be judged.
LEQ isn't on sale yet. But a prototype is already in the homes of about a dozen early testers who live in the Bay Area.
LEQ, tell me what the weather is today.
Danielle's job is to figure out what's working and what's not.
Sorry, please rephrase your request.
And she does that by visiting each of her testers twice a month. How important are these visits to your job?
They're critical. We're building a product for people who we are not. I'm not a senior, and how could you know how to design for somebody if you don't do research? Because otherwise, you would just be designing in the dark.
Jobs like Danielle's are just starting to emerge. Until recently, robots were mostly in factories, separated from humans. But now, they're finally getting cheap enough, small enough, and smart enough to be in our homes. This has created a whole new challenge of designing robots that people will actually want to interact with the way she talks.
It's a very special job, and it can be really hard, and it can be really frustrating, but at the end of the day, it's incredibly rewarding. And I think the most rewarding part about it is when I see the joy on the users' faces, like that they saw their feedback turned into something real.
Today, we've driven east of San Francisco to go see one of Danielle's research participants.
LEQ, tell me something interesting.
Did you know that Ronald Reagan was a lifeguard in high school and saved 77 people's lives?
Now, see, this is where a conversation is. She should open up and I should say, no, I did not know that. I expect her to be able to continue a conversation for at least a couple of comments.
Yeah. And why is that?
Why?
Yeah.
Because that's companionship.
When Betty was around Danielle's age, she was working with some of history's very first computers.
When I was finishing up my master's degree, I was working at Harvard in the computer lab when they were building Mark IV. A large room-sized computer. But now, this artificial intelligence stuff is amazing. LEQ?
Yes?
Schedule a doctor's appointment.
No problem. I'm working on it.
When Danielle brought along the idea of working with robotics for the elderly, I said, are you kidding me? Will older people connect to a robot? And she said, I don't know, let's research and find out.
Danielle grew up here in this suburb of Atlanta. Her parents spent much of their childhoods in Israel and met in the US.
We as immigrants, we understood that we might need to work a little harder. In fact, I feel that rather than taken away from Danielle, it gave her so much more, because she understood the fact that you need to run after your dreams and work really hard, no matter what the challenges are.
School didn't come easily for Danielle.
I have dyslexia, and that very much affected my self-esteem academically.
The principal of the school did not recommend her to take advanced classes. She fought for it, and she got into it, and she did very well with them, too.
Danielle's first job out of grad school was at X, the secretive research facility founded by Google. It's known for dreaming up all kinds of wacky, far-flung ideas.
Can you tell us about the moonshots you worked on?
No, I can't tell you too much about the projects that I worked on. I can say that I was working on robotics.
She loved the job, but wanted to work on something that would reach real consumers sooner. So she left X after a year and joined Intuition Robotics. She's been working in the field for 4 years now, and it took her a while to find her footing in a male-dominated industry.
I've gone to different meetups where there'll be like a circle of men with their like zip-up jacket with their like company logo on it and a beer in their hand. And I'll come in with lipstick and nobody wants to talk to me. This is my closet.
So at first she did her best to fit in, wearing a pair of glasses she didn't need and toning down her style.
So what's the kind of thing you used to wear to a conference?
Stuff like this, blousey things that make you look like you're 40.
But that got old after a while.
And what's the kind of thing you wear now?
Now it's like I just enjoy being kind of expressive and playful in what I wear.
Before we wrap up for the day, Danielle has one more LEQ tester to visit. Joseph is 97. And he's had the robot in his home for 8 months.
How are you?
I'm fine. How are you?
Good. How has Miss LEQ been?
She always tells me to take a drink of water at least 4 times a day.
So we added a whole bunch of new facts to LEQ.
Did you know that a cup of chopped red bell pepper contains more vitamin C than an orange?
Okay. What did you think of that?
Certainly the print was, I could see that quite clearly.
What about this?
I can see that. LEQ, play music.
No problem. It will begin shortly.
By 2050, almost 500 million people are going to be 80 or older. And if current trends continue, more and more are going to be like Joseph and Betty, living alone.
LEQ, stop.
Today, both of them are doing okay. But some of Danielle's other participants have been struggling.
Is it kind of hard to leave them at the end of the day?
It is. Some of our testers are pretty advanced in the stages of depression through loneliness and isolation. And at times, I know that LEQ is cheering them up in their day, but I know that it's only part of the way. No source of artificial intelligence robots will ever be able to replace humans and human companionship or human care.
The key to Danielle's work is to embrace that very limitation of machines.
Robots should help humans do what they love help humans interact with more humans, help humans in general, not pull humans away from humans, not take humans' jobs and leave humans without purpose.
Whether it's in our workplaces or in our homes, robots are soon going to be everywhere. And it's up to Danielle to make sure this robot-filled future leaves us just a little better off.
So don't be afraid. And if you are afraid, come and join us, because I promise it's a friendly place.
Times are tough. Jobs are scarce. It's risky to be outside and around others. Seems like there's very few ways to make extra money during a pandemic. So I guess I'll just hunker down and binge social media until this all blows over. Wait, don't these people make money? How do these people make money? Streamers, YouTubers, Twitch stars. How do they make money? Is it a lot? Is it a lot of work? I know, I gotta ask somebody in the biz, and I got just the guy. Austin John Plays.
This is your full-time job now, right? As of November of last year, yes. This was always just kind of like a side thing. Like, any money that I made from doing my videos and whatever else, I never touched that because I didn't really think of that as being like real money. And then it started coming in more and more. And then it was like I hit my first day that I broke $1,000 and I was like, this is actually going to be money.
How did the YouTube channel come to be?
When the game Pokemon Sun and Moon came out for the 3DS, there was like things that I learned about the game, and then I wanted to just share that information with people. And at the time, I didn't have any way to capture a screen or anything, so I found like generic footage and I kind of put it all together with so much editing. And that video got 6 views. And then 2 days later, I made another one, and that one got 12 views. And then I just started pumping out more and more content, and people were like, this guy knows what he's talking about. It really just started building on top of itself, and then it was like, my channel really focuses on tips and tricks. So I play a straight 18 hours, and I'll finish the game or get to about the 40-hour mark, and then I'll make my first video. While I'm going through, I have a giant notepad and just scribbles everywhere, and I make these notes of like the things that stumped me, so I know the things that may stump other people.
What do you need to think about if you're building your YouTube channel?
1, you need to do something that you're passionate about. Not that you like, not that you think you're gonna make money on, something you're passionate about. The other thing is something that other people are passionate about. It holds a special place to them. And third is, it needs to be something that people are gonna seek out information on. In order to enter into the marketplace, you either need to be better than everyone else, you either need to be faster than everyone else, or you need to be more accessible than everyone else. And you can't be more accessible because it's already on the platform. Granted, if you understand how the algorithm works, which is very similar to Google Analytics, then yeah, you can have a little bit of a head start. But if you're not doing it faster, and if you're not doing it better than everyone else, then why should anyone watch your channel? So my income as a YouTuber kind of breaks down to 3 different ways. 1, which is the bulk of it, which is ad revenue. Whenever you go and you watch a video and then there's an ad and then you wait 5 seconds and you hit the bottom right corner and then you go on to the next video, or a non-skippable ad, or the video starts immediately, you get the little banner ad at the bottom, or if you scroll down from the video, the first thing that shows there is an ad. Those are the 4 different types of ads that can appear on every single YouTube video. And all of them pay a certain amount. It varies on lots of things, like the country of the person who posts it, the country of the person who watches it, the time of year, where you are in the quarter, if there's anything going on with a reduction in ad revenue. Like, great example, COVID-19, companies weren't spending as much on advertising. So because of that, CPM went down. CPM stands for click per thousand. I'm using the Roman numeral for 1,000. And that means that for every 1,000 views, you get a certain amount of money. Now, on low ads, when I first started off, my CPM was 30 cents. So every 1,000 views, I made 30 cents. But then once I signed with an MCN and I started making more quality content and more engaging content, some of my better videos and certain times of the year, I can see CPMs as high as $12 to $14. And there's a big fluctuation between, you know, if I post a video when there's no ads being spent like January and February, that's the reason a lot of your favorite YouTubers and also TV shows don't post new videos in that time of year because ad rates are down. Why are they going to make content then? Instead, you're recording and you're bulking up for when ad revenue is higher. The second way that a YouTuber makes income is support, crowdfunding, things like that. When I first started off, Patreon was really the only option, but then they started rolling out supporters and members for YouTube channels. So whenever I have a live stream, you can click a button and then you can become a member, and then you get special icons next to your name. I believe they're called badges, or on any video, you can hit the join button and that helps support the channel. And then the third aspect of that would be merch. And for me, my merch has been somewhat basic. In fact, I'm wearing one of my t-shirts from last year right now. You have to endure the times that your first video gets 6 views, that you post it on Reddit and they say, shut up, and then an auto mod bans you. You have to go through that, because until you go through that and you discover why you're doing it, you're not doing it for other people, you're doing it for yourself. If you're not loving what you do, then it's not worth it.
Huh. So make a channel about something that I'm passionate about. Oh, sweet. I guess I can make the channel about that. Now, how do I grow an audience? How do I get popular?
It's all about diversification, right? You have to have a massive Twitter following. You have to have a massive Instagram following. You have to have a massive YouTube following. Of course, you have to be on Twitch, which is the key platform. But basically, any way you can get in front of your audience, you can engage with your audience, is going to drive those clicks, which ultimately drives the advertiser revenue that you get back from all of these platforms.
It's me and Dan playing video games and talking in a funny manner over them.
They're not just people who are good at games, they're actually people who are good at online engagement, online entertainment, first and foremost.
You have the right to remain stylish. Anything you wear can and will be used against you in the court of fashion.
The streamer is either very, very talented at the game. The best player in the game is generally going to draw a crowd because people like watching people who are very good. On the other hand, they're either very, very good or funny, charismatic, whatever it is on that side.
Oh, no.
You know, it becomes more of a show where they talk about other things outside of the gaming world, and gaming becomes really just a backdrop and an excuse to engage with that audience.
There were those weird, like, Ronald McDonald, like, straight to VHS movies. You remember those?
I'm personable, I'm chatty. I would kind of, you know, when boring things were happening in the game, I would ramble on about, you know, movies I'd watched or books I'd read and, you know, or conversations I'd had and stuff like that. And so I think being personable was a big part of that.
It's not just getting on and playing games. It's getting on and being an entertainer. You are putting on a show.
All right, now let me go ahead and grab the samurai sword that every gym has. Okay,
audience, and to have that audience, I think, stay with you, you have to bring something extra. You know, you have to find your niche. You have to find what works and what connects with the audience, and what makes them laugh and what makes them keep coming back.
You gotta make it a little more exciting, all right? Throw in a hanging bishop. Have everybody in suspense for a moment.
I think the real most important thing is to just get used to being on camera. Like in any sort of performance thing, is get used to talking on camera. You know, my first few videos were terrible, but because I sat down and did it for 6 to 8 hours a day, I just got used to talking and I got over that uncomfortable hump.
If you go into Twitch purely with the expectation that you're going to make money, make a job out of it, have all this growth, and it's going to be great, you're probably going to burn out prior to getting to that point, because there's very little payoff for a long time, right? Like multiple years generally before you really start to see a payoff. And so, you know, those first few times you're streaming, nobody is there. One person shows up every 30 minutes, says hi maybe, and leaves, right? Like, it's very discouraging, I think, for a lot of people. And so you have to be there just loving it. You have to love talking to yourself when nobody is around. You have to love just the game that you're playing, all of that stuff, because it takes a while. And I think a majority of people burn out prior to getting to the like profitable point of it.
And there you have it. My very own YouTube, Twitch, Discord, and streaming channels all ready to go live. It's a veritable social media ecosystem just on the verge of thriving. So, don't forget to smash like and subscribe, and visit my Patreon for perks. Also, go to my merch page. And one last thing, stay cool, my friends.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
And a very good afternoon, everybody. Live from the Bloomberg Interactive Brokers studio, streaming on YouTube and Bloomberg Originals. Tim, you know, is on leave. I'm Carol Masser, along with Bloomberg's amazing Matt Miller. And Matt, we've got the S&P, erasing its monthly advance. We're back below 4,200. What does it mean? I guess we're just kind of, maybe investors just rethinking about kind of the run-up that we've seen.
I mean, we were at the highest level that we've been since last August, right? Mm-hmm. So we have come pretty far, pretty fast. The thing is, it's such a narrow rally.
Which some people say is a negative, right? We've had conversations of saying, well, that means the market can actually broaden out at some point.
So the question is, will the rest of the market catch up to techs, or do techs have to the mega cap tech companies have to come back down?
Yeah, that's something we're going to ask our market guests. So coming up, folks, we'll talk about that. We'll talk about Jamie Dimon's second act, just playing around with their Joe Matthew and Kaylee lines. I love this story.
I am obsessed.
I know you are.
Obsessed with this story.
Matt, I think, woke up, picked up his phone, or however you read it, and we're like, okay, this is it.
That's exactly what happened. I woke up, the first thing I do is put on my glasses and look at the Bloomberg, and that's the story that caught my eye. I just think it's so fascinating because we've asked him so many times in the past, and he's demurred. I love my job. I love this bank. I love this country. And now he said, I'd be willing to serve.
Exactly. So, and you do wonder about what kind of a political leader we need in this environment. And maybe Jamie Dimon could be it. All right, we're going to talk about that. We're going to talk about a most read story today about hedge funds deploying ChatGPT. We're also going to talk about some AI stocks that maybe we don't talk about as much, like an NVIDIA, but you've got a C3 AI, right, reporting after the close. What is going on in that space?
Right, and Twilio and a couple of others that Kathy Wood, you know, what jumped out at me is she said for every $1 of revenue that NVIDIA and the hardware makers generate from AI, software makers are going to generate $8 of revenue. So that immediately
Talk about
got
a
me
multiple,
thinking.
right?
Yeah.
All right. Folks, lots to come on the next few hours of Bloomberg Business Week. Right now, though, heading over to our TV colleagues because we've got Countdown to the Close. It starts just in about a second here.
Countdown to the Close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. About 60 minutes left to go here in the trading session. Romaine Bossick joined now by Scarlett Fu, as well as our colleagues Carol Massar and Matt Miller. Welcome to our audiences across Bloomberg Television, Radio Originals, and those folks streaming on YouTube. Matt, appreciate you wearing a suit and tie today. Carol, you look great as always. Yeah.
Anyway, let's talk about what does look great and doesn't look great in today's market, and it comes from the same space. We're talking about semiconductors. You know, when you look at the space, the stocks, we've seen pressure on it overall today, but not so bad if you're Intel today, and thanks to the company's CFO coming out and saying it expects second quarter revenue to come in at the upper half of the forecast range provided last month, that at a TD Cowen conference. So you've got Intel up almost 7%, but top among the decliners in the NASDAQ 100, Matt, Marvell is down almost 7%. NVIDIA, which has been on quite a run, still on a run for the year overall, but down 4% today. And you have AMD with about a 4% loss as well. And that's despite B of A coming out and raising its price target on both AMD and NVIDIA.
NVIDIA is only worth $948 billion
If only it
right
could
now.
hit $1 trillion
If
again.
only we could go back through there. You know, a lot has been said. Romaine, you and Scarlett have been talking a lot the last couple days, or sessions, I should say, about the narrowness of this rally. There's no breadth. I was looking at a chart that Daniel Curtis, one of our producers in London, set around, showing that the spread between the S&P and the equal weighted index, which you can see typing SPW index on your terminal, is the biggest that it's been since 1998. So right at the height, or right, I guess, before the height of the dot-com bubble is the last time we saw a spread like this. To me, that signals that this rally ain't got no mojo left. You know, I mean, it's just about a few stocks, and I don't think the rest are going to catch up. I think the few that are winning have to come back down.
Yeah, we're actually going to dive a little bit deeper into this on Bloomberg Television a little bit later here, and exactly what that lack of breadth means here. Meanwhile, on a daily basis here, you're taking a look across the board, down for roughly a second day here with the S&P 500 and that critical retest of the 4,200 level. At least for now, you can call that a failure. Down about 0.5% on the day. The Dow and the NASDAQ down by a similar amount. And a lot of those cyclical names, particularly when it comes to the transport space, as well as some of the energy names, really taking it hard today, Scarlett. The Russell 2000 down 1.1%.
Yeah, the Russell 2000, the real laggard. And I have a better stat for you, Matt Miller. Mizuho said that the spread between the NASDAQ 100 and the Russell 2000 is at a record, so even surpassing the 2020 melt-up and the 2000 dot-com bubble period. But let's take a look at the industry groups right now, because what you'll see is some traditional safe havens or defensive sectors in the green. Utilities, healthcare, staples, real estate also up there as well. But utilities, the big winners here, up by better than 1.2%. And on the downside, plenty of sectors there, led by energy stocks as oil prices continue to sink, now below $69 a barrel. Energy stocks off by 2%.
How do you guys read that, the energy declines?
The energy
It's tracking
declines?
oil prices.
Yeah, I mean, there's no
China.
I mean,
Bad news out of China, Carol.
Yeah.
There's the demand.
You're focused. You're laser focused on this more than anyone else.
I was just saying it's an important indicator.
It is an important indicator, and that's having a lot of ramifications, I think, for some of the tepid nature that we're seeing in the broader market overall. You mentioned NVIDIA. Today, of course, we talk about the phenomenal rally, just pulling back by about 4% here on the day. But take a look at Broadcom and some of the other folks in the chip space. We're going to get Broadcom earnings tomorrow after the bell. Those shares only higher by about 0.5%. But of course, a lot of attention will be paid to that. And then we talk about the quote-unquote real economy, at least when it comes to consumer spending. An interesting warning out a little bit earlier out of American Airlines. Nevertheless, those shares up by about 1% on the day. And Capri Holdings, of course, which is the owner of Michael Kors and a few other brands, down 11% here on the day. Yet another retail apparel maker making it clear here that the amount of money that we were spending on those items over the last couple of years not holding through. We'll flip up the board here real quick here. And this just goes back, I think, to what you were getting at, Matt, and to what you were getting at, Scarlett, as well, the narrowness of this rally. Remember we all stopped talking about the FANG index?
Yeah.
And we now started talking about it again. Well, it's back, at least back for now here. You see the outsized gains here, the 4th straight month of gains over the last 5 years. That has basically been your winner.
All right. Speaking of the markets overall and the Fed meeting that's just about 2 weeks away, we've had a lot of Fed speakers, right? That kind of come fast and furious across the Bloomberg. Well, among them, we had Federal Reserve Governor Philip Jefferson, who, when it comes to monetary policy, may be signaling a pause, but not necessarily a peak when it comes to rates. Here's what he had to say earlier.
A decision to hold our policy rate constant at a coming meeting should not be interpreted to mean that we have reached the peak rate for this cycle. Indeed, skipping a rate hike at a coming meeting would allow the committee to see more data before making decisions about the extent of additional policy firming.
All right, could it be data dependent? Well, that's the Federal Reserve Governor, Philip Jefferson. That was an online presentation on financial stability and the economy. So, you know, what? Go ahead.
Well, I think it's interesting because, I mean, we heard also from Harkin a little bit earlier. He said something similar, but then you had Mester, who was on a competing network, basically says that she doesn't see a case for a pause at all, or no compelling reason for a pause.
I feel like
was her exact quote.
For all this Fed speak, you should pay attention to it like a basketball game. Wait until the 4th quarter because, yes, we know that the Fed's meeting on June 14th.
Are you one of these fair weather basketball
No, but
you
just listen. June 14th, FOMC meeting, Jay Powell already indicated it's going to be a skip or a pause, right? And then he's going to consider the totality of the data. There's a lot of data between now and July 26th. Wait until the data starts coming in mid-July, and then we'll see where we're at. In the meantime, the Fed speakers are going to say what they're going to say.
I want to wait. I want to be presumptuous now.
I always think it's interesting that they say, you know, Jefferson said 2 of the most obvious things anyone could say, and they both were red headlines. He said the pause is going to give them time to assess data. That could be true at any time.
No doubt.
And then he said, even though they might not hike at the next meeting, that doesn't mean they're at peak interest rates. He could say that any time. It doesn't matter, but the market takes these things so seriously.
He said it now, man.
Yeah.
I think what's interesting about we had job openings surge to 10.1 million. We are seeing increasingly remain some data points that show that maybe the Fed policy is continuing to have some impact in slowing things down.
Slowing things down, but also, of course, you look at the resiliency in some of those numbers, and I think we'll probably get a much better read on Friday when we get that monthly jobs report. But the idea here is that they have the luxury of pausing, right? I mean, that the economic data has cooperated enough, at least what we know publicly, where maybe they can feel comfortable saying, let's just step back and look at the data.
Think of it as another tool, right, that the Fed has to play around with.
I thought they only had one tool.
Maximum optionality.
And Scarlett, I'm sorry for interrupting. I thought we could talk about the energy markets before, but hey.
I never apologize for interrupting.
This is true.
All right, guys, we're going to be back in less than an hour's time. We'll continue our cross-platform coverage, bring you down to the market close. Join us on radio, TV, on YouTube, and Bloomberg Originals, 4 p.m. for Beyond the Bell.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenovec on Bloomberg Radio.
All right, everybody. We're going to continue our conversation with Romaine and Scarlett in just a moment. But I kind of agree with Scarlett that it's basically the Fed's going to walk into the Federal Reserve June 14th, right? And they're going to say, what's in front of us? What's the latest data points? And they're going to make their decision. I mean, that's what it's really all about.
Well, I'm going to have to take the other side of that
Why?
bet. Because this is a Federal Reserve that does not want to surprise the market at all.
But that's
they telegraph before the meeting, well ahead of the meeting, what they're going to do. And they would never make a decision on the day of that's different from what the market expects. That's just not Jerome Powell's style.
So the Fed speakers are managing us right now?
They are.
Okay. All right. All right.
So it's a skip.
Okay.
It's a pause.
So
they've all come out and told us that, and that's what it's going to be.
So what's really important is the last speaker before they go dark, before the meeting. That's what really matters. I'm just going to say, hey, what really matters to us, as you know from Matt, when he woke up this morning and and put on his little not banana slippers.
Because I'm getting so old, I have to put on glasses. This didn't happen before I was like 47, but now macular degeneration is taking over.
Puts on the glasses, puts on the bunny slippers, and then picks up his phone and reads about Bloomberg. This Bloomberg exclusive with the most listened to big bank CEO, Jamie Dimon, who, talked about a lot of the big macro stories of the day. The thing we all really seem to care about is Dimon hinting about life after J.P. Morgan, President Dimon, perhaps. Here's Jamie earlier today on Bloomberg TV from J.P. Morgan's annual Global China Summit in Shanghai. Dimon, of course, talking with our Bloomberg team, specifically Stephen Engel.
Now, Jamie, I know last week you talked a lot about succession or about your position, that you're not talking about retirement right now. I do need to ask you, though, and your name has been bandied about for years about public office. I mean, I don't think Wall Street's too pleased about a potential Trump versus Biden runoff next year. Has that scenario ever crossed your mind that you would run for public office or even accept a cabinet position?
You know, obviously it's crossed my mind because people mention things to you and stuff like that. You know, I love my country, and maybe one day I'll serve my country in one capacity or another, but I love what I do. I think JP Morgan do a great job for helping Americans, for helping countries around the world, and this is my job. This is what I'm going to do, and I'm quite happy doing it. I still have the energy to do it. I mentioned, you know, that when you don't, I think people should give up the job. We've got a fabulous management team where I really enjoy working with, so no, I'm here.
Here for now. Jamie Dimon, of course, with our Bloomberg News, Stephen Engel at the Global China Summit in Shanghai.
I think Bloomberg News is okay.
That was like so bad. Trying to rush to get to Allison Williams. Let's get into it with Bloomberg Intelligence Senior Global Banks Analyst Allison Williams with us on Zoom in New Jersey. Allison, thanks for joining Matt and me. Gosh, we can't talk enough about this story. How do you see it? Should we assume potentially that Jamie Dimon might be, for now, really considering maybe a run into politics?
I mean, I think, you know, as he said in the interview, and he also said at Investor Day, he loves running the company. That's obvious.
He always says that. That's good that the CEO of JP Morgan likes his job. That's fantastic. I mean, if you pay me that much money, I'll like any job you give me.
Right, but he makes a point that, you know, he does not see in his future sitting around and playing golf. That's just not who he is. He also talked about the love of his country, and if you read his annual letters, he always has definite views, not just in terms of bank regulation, but thoughts broadly. And you know, the interview earlier where he, you know, spoke globally about the economy, about China, and different things. So he definitely has views. He obviously is a strong leader, and he did leave the door open. You know, president, I think we all like to think about that. Is there potentially another role? We can look at what other former CEOs have done, like Hank Paulson. You know, could there be, you know, something in Treasury or something else in government?
It does seem like he's talking about serving his country, and there are a number of ways he could do that other than as president. Treasury Secretary is the most obvious.
But he would take the top spot.
For a guy from Wall Street, but exactly. You know, Allison, you've been covering Jamie Dimon. How long has he been running JP Morgan? Since 2006? I'm sure you've been covering him since long before that. Would this guy really take a less senior role than president in the United States government?
Well, I guess it depends on how you define senior. I mean, head of Treasury would I think considered by many to be a senior role. Certainly, president is a much broader role, and I think he has thought about it in the past. But and so I think there are different options that he might consider.
So I have a question. If he didn't go for the top spot, although I agree that that's where he'd go, Allison, if he, let's say, would be Treasury Secretary, could he be a Treasury Secretary under a Democrat or a Republican, potentially?
I think that you know, he has sort of at least indicated some of his political views. I think that as long as he you know, most important for him would be to get things done according to his beliefs. So that could certainly be an influence.
Wait, what does that mean? Wait, help me out there. What do you mean by that?
Commit, Allison. Just take a stand.
Well, I guess I'm just saying that, you know, under prior leadership of this country, I think he has voiced opinions that were not in sync with that prior leadership, and so that could influence who he might want to serve under.
Okay.
So it sounds like he could actually, I get it. I get what you're saying.
I just wonder if he would. Now, obviously, this is very speculative, and
it's what we love to do here.
I just think because of the stature of Jamie Dimon on Wall Street, and because of the political setup that we have now, where it seems like every candidate is one that nobody really wants to vote for. It would be interesting to have an outsider. You know, I talked to Ross Perot Jr. earlier, and I said this kind of reminded me of his dad running, not because Jamie Dimon and Ross Perot are similar, but because it's a billionaire from another industry who's like a titan of his industry, and now he's stepping into the political ring.
It's not unheard of.
At a time when it needed a little bit of shaking up. I just think it would be fascinating. I can understand why you're a little hesitant to, to speculate with us, Allison. But do you think he would run as a Democrat or a Republican?
I think I guess I would just allude to what you were saying before in terms of, we have a leader, right? That was in business and has switched parties. So I guess that's what I'm alluding to. I think it would be more important for Jamie to run along the lines, regardless of the party, he would want to run along the lines of the principles that he believes in. So I can say Bloomberg, right, who owns our company, and ran for office successfully as mayor, and did switch parties because he just believed in a set of principles that he wanted to guide to. And I think most important to Jamie would be leading towards those guiding principles. I think what would be tough for him in government, and what's been tough for other bank CEOs that have gone into higher positions in the federal government, has been getting things done. And Jamie is definitely someone who's extremely hands-on, likes getting things done. And I think that would be the thing that would be tough for him.
And I also think he's not going to run unless he knows he's going to win. Like, he's just that kind of an individual. And I don't know that. The money. Well, yeah, but among other, Hey, the reason we are obsessed with it, Allison, as you know, it is the third most read story on the Bloomberg in the past 8 hours. So thanks for playing along with us. Having said that, what was very significant is about Jamie Dimon, the presence, the company, holding this event in China at a time when politically the tensions are pretty difficult, or so it seems at least. What's the most significant thing you got from Jamie and his comments out of China today?
Most significant, I think, as it pertains to China, is just the long-term commitment, despite the difficulties and despite the added complexities, that JP Morgan is committed. And I think that is something that for banks, but businesses in general, in order to be successful over the long term, you do have to retain that commitment. And I think the fact that he is saying that it is difficult, but they will manage through those difficulties. Also, just talking about the fact that seeing less trade, but not a decoupling. And I think that's important for JP Morgan as a significant global bank, the most significant global investment bank, and also a leading global asset manager.
How much would it hurt them at decoupling? How much would that hurt JP Morgan's, revenue?
I mean, I think I wouldn't point to, I guess, a specific thing, right? But those businesses are global businesses. To the extent that it hurts the economy, that's the biggest, I guess, indirect impact, if you would. But they do serve multinational corporations that have operations around the world. So in terms of a direct customer benefit, wherever those companies are operating, I would imagine they would likely support in those huge capital markets businesses. They're not sort of an on-the-ground retail lender like someone like Citigroup, which is a strategy that only Citigroup and HSBC have been successful, and even those banks have sort of pulled back from that. So from a direct impact, perhaps less.
Allison Williams of our BI team, thank you so much. Shares of JP Morgan down about 1.4%. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We've got 39 minutes to go until we wrap up the trading month of May. We do check markets all day long. This update brought to you by BNY Mellon Insight, June 6th through the 8th in Orlando. Don't miss the essential event for the financial advice community. Visit insight.bnymellon.com. Treasury yields dropped after some Fed officials signaled a potential pause in interest rate hikes as early as June. The Dow, the S&P, NASDAQ, they are all in the red right now. We're looking at a 21-point drop in the S&P, down 0.5%. The Dow down 132, down 0.4. NASDAQ down 66, a drop there of 0.5%. 10-year yield 3.63%, with the 2-year 4.39%. As for the overall market backdrop, Amy Wu Silverman is head of derivative strategy at RBC Capital Markets.
What has really surprised me is time and time again, the equity market can get stuck to a narrative that they really like, and that FOMO still returns. And we saw that with NVIDIA, but we also saw that with AMD. We also saw that with Meta. We see it with AI beneficiary stocks, where, you know, the equity market latches on to a theme it really likes. And you, in particular, see it in these mega cap tech names over and over again, especially in the last 5 years.
Spot gold up 0.2%, $19.63 the ounce, while West Texas Intermediate crude 68 even a barrel, down 2.1%. After earnings, Advance Auto Parts shares are plunging 33%, recapping stocks lower. S&P down 0.5. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
It is indeed. Charlie Pellet, thank you so much. Carol Massar, along with Matt Miller, live in our Bloomberg Interactive Brokers studio on YouTube and Bloomberg Originals. Okay, so we are definitely awash in AI conversations, the narrative, the market moves related to such, like this year's mega outperformance by NVIDIA, although pulling back a little bit today. In keeping with that, earlier on Bloomberg TV, I think overnight actually, Kathy Wood talking about what will be the next to ride on the artificial intelligence frenzy driven by NVIDIA.
We think this is a very large market, and we believe right now the hardware side of it is probably in the $30–40 billion range. So multiply that by 8, we see the software side going to 8 times that. But over the next, between now and 2030, we think artificial intelligence is going to add more value than any of our other technology platforms.
All right, that, of course, is Kathy Wood overnight of ARK Invest, really defending, because she's been under a lot of criticism, Matt, for her selling of NVIDIA back in January, which we know has been on a tear this year.
It's basically tripled since then. So, yeah, she continues to say, like, valuations were too high and trying to kind of justify the sale. Well, I think she should just say, we screwed up. You know, mea culpa. We would have preferred to make money with that stock. We didn't. You win some, you lose some. Let's move on. Well, but the software part of the story is really interesting, I think. I agree. The only problem is her track record for exaggerating with her forecasts. She's like the boy who cried 10,000 wolves, you know? I mean, she says Tesla's going to be worth 2,000. By the way, Tesla's trading at the same PE, forward PE, as NVIDIA. So if she thinks that was overvalued. The only thing I will say is she was out early when it comes to Tesla, a name that nobody wanted to back, and she wasn't wrong about that. And so maybe her numbers or her peaks maybe don't exactly mesh with the reality, but a lot of the trends that Bitcoin,
she talks about.
Like 1.3 million, I think.
Moderna, there's a lot of plays that have, and there are other companies that have mimicked her in terms of the innovation play. I'm just going to put that out there.
Well, just take a look at
the other side.
The performance of the fund.
Okay.
It's very bad.
But take it back to the beginning. Okay. All right. We're going to continue this. In the meantime, we do want to talk about one of the most read stories on the Bloomberg. Yes, folks, we're going to get to a point here because it's about hedge funds specifically, deploying ChatGPT to handle all of the grunt work. So it's got this AI play, no doubt about it. So let's get into this story with Bloomberg News Managing Editor of Technology and Global Cybersecurity, Lynn Dewan. She's here in our Bloomberg Interactive Broker studio. I hope we didn't freak you out with her.
No, I'm highly amused.
You can do
laughing throughout. And I'm so glad that I'm not here talking about NVIDIA because I've been talking NVIDIA for the last week and I'm done with it for now.
All right,
they've reached the $1 trillion mark and now it's done for now.
Well, but wait, what is the narrative around that? Is it that it's just too much right now at this point?
I think that everyone's freaked out over the past week, right? I mean, you've seen such huge gains. Yeah. You've got to take a pause and question whether it deserves that. And then Cathie Wood, right? I mean, she's got some valid points. There's going to be more competition in this space. There already is. It's only a matter of time before you see more and more people pile into this AI market and try to stake their own claim to it. So
it's absolutely true. I mean, the thing about NVIDIA, not to bring it up, sorry, Lynn, is that for a long time, I feel like if you called up your broker and said, I need it on AI right now, she probably was like, there's a stock for you. It checks every box, as Cathie Wood said. NVIDIA is it. And that was the only stock. Everybody else, even in AI, wasn't doing nearly as well as NVIDIA. But at least the good thing about Cathie Wood's interview on Bloomberg TV is that she points out there are going to be a lot of other beneficiaries. If it's really true, if this is the next wave of innovation, it's not just about the people who make chips, right? There's so much more.
Much broader.
Think about the entire AI supply chain. It goes from the fossil fuels that generate the electricity, that power the data centers, that use the chips. There's an entire chain to make money off of, not just one company or
so tie in Wall Street because the one thing we need to talk about is AI is not a new thing, and we keep bringing whoa, look at this new, shiny object. But it's been around for a long time. Generative machine learning, though, does take this all to a different dimension. Talk to us about Wall Street and their embracing of AI and where we are today.
Yeah, so let's talk specifically about generative AI because that is where we are at right now. That is what's new, right? And when it comes to generative AI, I'm talking about the AI tools like ChatGPT and DALL-E, where you can give it a prompt show me a picture of a rooster that's pink sitting on a brown couch, and it'll be able to do that. So it can create content on the fly. They're basically using these kinds of generative AI tools for back office work. I mean, you said it well, grunt work, right? So these are the kinds of tasks that you might assign to interns or entry-level workers or admins. Some examples that we gave in our story today were summarizing fund performance, assessing vast amounts of market research to distill it, writing basic code. These are the very mundane tasks that real junior workers of Wall Street are used to doing.
And they've been doing this for a while. Or no, is this new?
The generative AI part is the new part, right? So Wall Street has been using machine learning for years. I mean, these hedge funds are just as much software companies as they are traders and investors at this point. They employ a ton of engineers that just do quant research, just build algorithms. I mean, that's where quant trading comes from. So really, AI is not new to the space. Generative AI is new to the space. I mean, it's new to everybody. It's new to the world. ChatGPT changed everything, and now suddenly everyone can program, everyone can use large language models, everyone can write essays.
But Carol, as you point out, it's just one more tool that Microsoft is offering people in the back office, right? When I first started out as an intern at Tucker Anthony, 25 years ago,
little Matt Miller,
I had my introduction to Excel, right? I was using other Microsoft tools. I was, printing out mailers.
But there are tools and there are tools, Matt, that change the world
but this
technologically.
But I think, Lynn, what you're saying is right now, Wall Street is using this just as far as the intern sending out Christmas cards, right?
New Excel, right? That's right.
It's not picking stocks for anybody yet.
Correct.
But it could, because and we've talked about this, Matt. Right?
Well, and they wrote about it.
It gets smarter and smarter and smarter.
That's right. I mean, it potentially could, and I think that is the hope of these hedge funds. But the technology isn't perfect. You might have read the stories, but ChatGPT, it lies. It makes stuff up, literally, and it spits out a lot of really inconsistent responses, and nobody really knows why, even the people who built these systems. So there's the issue of inconsistency and the fact that it can make up things, but there's also the issue of data leaks, which financial companies are very
This weekend I was using ChatGPT to try and determine the best strategy to get my 3 of a kind in Yahtzee. and it told me one thing, and I questioned the model, and then it told me another. It said, I'm sorry, you're right. I drew the wrong conclusions.
Can we just all have a moment of Matt playing Yahtzee? Okay, now go ahead.
So my point is, it makes mistakes. On the other hand, in your story that we're kind of focused on right now, Lynn, which is Justina Lee and Sejal Kishan wrote, hedge funds are deploying ChatGPT to handle all the grunt work. They point out that the Fed found OpenAI's ChatGPT does better than Google's BERT in determining whether or not sentences are hawkish or dovish. So it does have real value in terms of investing.
It could have very real value, and Justina and Sejal laid it out very well. I think that they are still trying to figure out where that value lies. I think a part of it isn't even just concerns about the factualness of these tools as much as it is, how do we make it work? How do we use it so that it makes money? So there's that too.
And I think the quandary is, like we talk about, it gets smarter and smarter the more data that gets put into it. But at the same point, does that mean you have to open it up to everybody? And that means everybody has your information. And I feel like that makes it really tricky.
The open source nature of some of these tools really freaks out Wall Street. They're trying to build their own in-house tools. Everybody is looking at that, but that's the big concern, right? You just don't know where that information is being stored when you put information in. I don't know where your Yahtzee information is being stored in ChatGPT right now.
Here's the thing.
It could be open to everybody now.
If you're going for 3 of a kind and you roll 2s, do you pick up the other 3 dice and roll them, or do you pick up all 5? Because your chances of rolling 3 of a kind are like 42%
All I
anyway.
know is this holiday season, when you get that card, Happy Holidays, Matthew Miller from ABC Brokerage House. It might have been ChatGPT. Great stuff. We are all learning as we go in this. Lynn, thanks so much. This was fun.
Thank you.
Lynn Dewan, she's managing editor of technology and global cybersecurity at Bloomberg News, here in our Bloomberg Interactive Brokers studio. Do you play Scrabble too?
Well, we do play Scrabble, but it was an international crew, so we felt it would be unfair, and we chose Yahtzee instead.
Oh my gosh, to be continued. Right now, though, let's get a check on world and national news. Off to D.C. we go in our 99.1 newsroom, and Nancy Lyons. Nance.
Thanks, Carol. The debt ceiling deal is racing to the finish line in the House. The agreement between President Biden and Speaker Kevin McCarthy is headed for a floor vote tonight. That's despite opposition from hardliners on both sides of the aisle. Bloomberg's Anne-Marie Hordern has more from Washington.
Republicans do expect 150 of them, around that number, and this is what Hakeem Jeffries, the Democratic minority leader, told us last night. That is what he is expecting Republicans to come and vote for this bill.
Bloomberg's Anne-Marie Hordern reports at least one Republican holdout is calling for a vote to oust McCarthy, but the speaker says he's not worried about being replaced. The special counsel investigating Donald Trump has reportedly issued subpoenas over the firing of the former president's top cybersecurity official.
Christopher Krebs led the Cybersecurity and Infrastructure Security Agency, or CISA, during the Trump administration. That agency famously declared the 2020 election the most secure in American history. That put Krebs at odds with former President Donald Trump's fraud claims. The New York Times reports special counsel Jack Smith's team is now questioning witnesses about the events surrounding Krebs' firing. They're also asking how White House officials approached the Justice Department after Trump's election loss. In Washington, I'm Nathan Hager, Bloomberg Radio.
The White House is calling a Chinese fighter jet maneuver over the South China Sea unsafe and unprofessional. National Security Council spokesman John Kirby says the jet flew directly past the nose of a U.S. jet.
They forced that RC-135 to go through the jet wash of the Chinese fighter, which just tells you how close it was, several hundred feet.
Kirby says the incident shows why it's important for the U.S. to keep communications open with Beijing. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. We've got minutes to go until we wrap up the trading month of May. Let's head right over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks in the red from the start today, but off their session lows. Dow pairs losses to 117 points. S&Ps are down 18, and NASDAQ falls by 55. The U.S. 10-year yield at 3.63%. Gold is up 2, oil trending in the red, and Bitcoin is lower by 2.6%. Of the main 11 S&P sectors, leaders were utilities and healthcare. Energy and consumer discretionary were under pressure. And leaders to the upside in the Dow, Intel and Verizon, while 3M fell 2.5% and dropped to its lowest level since 2012. After earnings, Advanced Auto Parts fell 35%. That's the most ever. And in other news, Intel projected Q2 sales near the upper end of the range, while Morgan Stanley said that trading revenue will be notably down year over year. Wrapping things up, some of the names reporting after the bell tonight include C3 AI, CrowdStrike, Nordstrom, and Salesforce. Live from the First Word breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney, and to hear live breaking news over your Bloomberg type squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, check it out, everybody. Just under 18 minutes left in today's trading session. Carol Master, along with Matt Miller, live in our Bloomberg Interactive Brokers studio on YouTube and Bloomberg Originals. And Matt, we're definitely off our lows of this session, just down a little bit on the day overall. But feels like we're marking time, and we have the S&P keeping below that 4,200 mark.
Yeah, that's right. So we've given up, I think, all of the gains for May. Sell in May and go away is what they say, you know. So I guess today's your last day to do that.
Jump on board. All right, let's get to it. Our Drive to the Close guest is Ann Maletti, Head of Active Equity over at Allspring Global Investments, with us on Zoom from Menominee Falls, Wisconsin. Ann, nice to have you back with us. Hey, let's talk about the S&P. We did see it down, I think, more than 1% earlier in the session. So it is still down below 4,200. Little change for the month overall, so giving it all back. Is that significant in your view?
It's not too significant, Carol. As you know, and as you all talk about so often, there's just really a few names that have been the major driver for the direction of the S&P all year. Just really 7 names really pushing for almost all of the returns. And so what I find much more interesting is digging below and looking at what the stocks underneath those 7 are doing in the direction of those stocks.
So what do you see when you do that? I mean, you take out the big mega cap tech gainers. What's the rest of the market doing?
Yeah, I think, Matt, it's a really interesting question because most people would assume what you find there is just all underperformers. And generally, in aggregate, yes, that's the answer. But when you look company by company, you see a lot more dispersion. You see companies that are really some that are really outperforming given the volatile environment we have, and some that are underperforming pretty massively. But what I like is, for the most part, company fundamentals are driving performance. And you're not seeing that necessarily just, on the top side of the market with those tech names. You are seeing it as you dig deeper below. And so it makes it really interesting for active managers here and for people who want to spend the time focusing on fundamentals and stock selection.
So where do you look, though? Because there's obviously, we spend, and as you know, a lot of times talking about the large cap names, those S&P 500. Yeah. There's so much that goes on when we talk with guests. I feel like I felt that when we were out at Milken about the mid cap space. And then, of course, we also look at the small cap space, great indicator of kind of the broader U.S. economy. Where do you find the most interesting moves and the best opportunities?
Well, when I'm talking to our investment teams right now, what they tell me is the significant underperformance on an aggregate basis, again, across the small and mid-cap companies, that's where they're finding much more opportunity. And so although they might hold some of those large cap names that you talk about every day, they're not, necessarily adding to those. That's not an attractive place to add. They're much more expensive. Small cap stocks, the Russell 2000 has underperformed the Russell 3000 5 consecutive years and 9 of the last 11. And so, do any of us know when that's going to turn? No, but what we do know is historically that's kind of unbelievable in terms of what history would suggest. And we also know that when you're coming out of an inflationary time period, once you're out of a slower economy, and you start to see a pickup, which I know we have a little bit to go here, small cap companies can outgrow and grow at a faster pace. And so, I know you asked me a very specific question, Carol, and I don't want to escape it. I think what we're seeing is across the board, across industries, company by company, when you're out there looking, there's some very attractive names, whether that's in healthcare, whether that's in technology, just down cap, whether that's in industrials. There are companies that have good cash flow, good balance sheets, and management teams that have lived through a lot of uncertain times in the past, and they're the companies that are managing through this time period really well.
Dan, what do you say to the investor who says, listen, I don't want to take that much risk, and I'm already getting, for the first time in forever, 5-6% out of very safe fixed income investments. Is fixed income a big competitor to the equity investments that you want to make?
Look, I do think fixed income is back, and our fixed income team is really doing a great job trying to add alpha on top of where yields are going. But remember, most investors are looking for a diversified investment view. And for the equity portion, you started off the show by saying, a lot of the old theory, sell in May and go away. If any investors do that, even if it's outside of May, you got to be right twice. You got to be right on the sale, and you got to be right on the return. And so I don't think now is the time to leave equities, because it still is a great place. Over history, time would suggest it's still the place where you're going to gain the greatest return.
But where would you park if you're looking to, if we get what some say is a downturn in the equity side of things, and where do you kind of park to maybe just even maintain your gains at this point?
Yeah, that's the most important question, Carol. And I do think we are headed into a softer economy as we enter the back half of the year and maybe even into early 2024. So I see that our investment teams are being much more disciplined and much more focused on investing in quality companies, looking for companies that are trading at a discount, which is why we see them going more down cap. They are looking in areas of the market that have underperformed and industries that have underperformed, but again, looking for stronger fundamentals. Dividend-paying companies still are important, and more importantly, though, are companies that have a dividend and can continue to pay that dividend. I would also say, the emerging market space is an area that I haven't talked about a lot in the last couple of years, but an area that, could potentially show, I think, good returns in the next couple of years. Many emerging markets have already seen peak rates and are starting to take rates down. They're a little bit ahead of the U.S. And so as I talk to a lot of our emerging markets teams, that's another area.
All right. Well, good to get some time with you. And thanks. Be well. Ann Maletti, she's head of active equity, over at Allspring Global Investments on Zoom from Menominee Falls, Wisconsin. I was just looking at the Schwab Dividend Equity Index ETF, and it is down about 6% so far this year. But I've heard a lot of folks come out and say dividends. That's the way to go.
Yeah, well, they're piling into the short treasuries, piling into money markets. You know, people always say cash on the sidelines, right?
Yeah.
If you type, I think, MMFA index, you can see $5.4 trillion there.
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Ambarella shares are plunging after sales guidance from the maker of semiconductor devices fell short of expectations. Ambarella reported earnings last night. Today, the stock is trading lower, down now by 12%. Sources say NVIDIA CEO Jensen Huang is heading to China to meet with tech executives in the world's biggest chip market, despite rising tensions between Washington and Beijing. Those sources say Huang, who headlined a trade show in Taiwan this week, plans to travel to China for the first time in years in June. Right now, we've got NVIDIA shares down by 5%. The Federal Reserve may not be done raising rates just yet. That is the view from J.P. Morgan Chase CEO Jamie Dimon, and he spoke exclusively to Bloomberg from the sidelines of the J.P. Morgan China Summit in Shanghai.
They're right to pause at this point. It's been a big increase, 500 basis points or so. Take a pause, but I do think it's possible they're going to have to raise a little bit more.
And JP Morgan Chase shares, they're down now by 1.2%. Diamond spoke exclusively to Bloomberg from the JP Morgan China Summit in Shanghai. You can catch the full interview on today's Bloomberg Daybreak podcast, available on Apple, Spotify, the Bloomberg Business app, and anywhere else that you do get your podcasts. Among the names scheduled to report earnings after the close of trading today, we will be hearing from Salesforce.com. Also scheduled to report will be CrowdStrike. And those are some of the company stories we're watching this hour. This is Bloomberg.
This is Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
All right, everybody, just about 5 minutes, really just under 5 minutes left of today's trading session. We're going to head over to Scarlett and Romaine in just a moment, cap you down to the close. We've got some earnings coming your way, including Salesforce, C3AI, Nordstrom, a few other things. In the meantime, a story that's definitely caught our attention is about Amazon kind of taking the axe to some of the projects that at one point were, I guess, pet projects for Jeff Bezos and his team.
Yeah, obviously a new CEO wants to make his mark, but if you're the new CEO following in the footsteps of giants like Steve Jobs or Jeff Bezos or, I don't know, there's only a few, right? Bill, what's his name from Microsoft?
Bill Gates.
Usually you don't want to make. Usually you don't want to make waves right away.
We'll play Pictionary.
Yes.
Sounds like.
So Andrew Jassy, you know, he's cutting some of these projects that were pet projects for Jeff Bezos, like a lot of Alexa involvement in other projects, a lot of assistant, really interesting kind of AI projects, actually, if you look through.
Yeah.
And I guess they just have so much going on that he can cut 37 different projects and not make a huge dent in revenue.
Isn't that like remarkable? Yeah, it's just a bunch of projects. It's a great little go through, if you will, if you head to Bloomberg.com or check it out on the Bloomberg terminal. But it is interesting that, you know, this is something that is part of their culture, right? Hey, team, come up with some ideas and we'll kind of play around with it, if you will. But it does look like Andy Jassy is, you know, these companies, these big growth companies, when there's so much money ultimately coming in, they can kind of play around. And then at some point, maybe they have to be like, you know what, we don't need to be spending
There will be
time
no more
on this.
treasure truck, for example. This was roving
What?
pickup points for daily deal items.
What?
There will be no more Prime Grocery Delivery Hub, something I never
Remember
used
Amazon
anyway.
Books?
Yeah, well, there will be no more Kindle store, Kindle News in China, no more Kindle newsstand. So there's a couple of Kindle issues as well, but I think it's mostly about cost cutting. They've also fired, what, like 27,000 people?
Yeah, they were quick like a lot of other tech. But they also hired big time, right, during the pandemic. And so a bit of a rethink. But yeah, cool little story by our Matt Day. So check it out. He follows Amazon along with the team. And, you know, when you have some slowing sales growth, you do a kind
March to those closing bells. As always, at this time, we take you to the bell and beyond.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Scarlett Fu. We're counting you down to the closing bell, here to help take us beyond the bell. It's a global simulcast with our friends Carol Masser and Matt Miller. Welcome to all of our audiences across our Bloomberg platforms, radio, television, as well as those folks on originals and streaming on YouTube. Carol, we're going to close out this month here on a down note. There is some bright spots out there. Unfortunately, those bright spots are pretty narrow, and that's basically around tech and all things AI and chips.
Yeah, no, listen, I feel like you guys probably the same with Matt and myself. We've been having all of these market conversations, and everybody keeps reminding us, hey, folks, the gains that we've seen in the overall market are really just a handful, a basket of stocks. We keep talking about the narrow breadth. And, you know, is that cause for concern? Can we broaden out? I guess that's the big question at this point, or is that just a sign of more downside to come here, Matt?
Has anyone said, Romaine, on your program at all in the last 2 hours, sell in May and go away?
Not yet, Matt. I think that would kick them off the program.
Well, today's the last day, if you want to do that.
What do you do in June?
I think you stay away, as the old adage.
Well, it's actually supposedly a really weak month. It's a S&P 500's second worst month, down an average of 0.4%. September, by the way, is the worst.
That is a rumor, actually. I found that to be untrue. Over the last 20 years is what you're saying, right?
Yeah,
And
over
it's
the last 20 years.
Third worst performing month because January is bad as well.
Did you ask ChatGPT
SEAG
that?
Go. No, I used the Bloomberg SEAG Go. And you can change that data, by the way. If you look at 21 years or 19 years, it offers wildly different, so the averages can change a lot depending on the data.
You can cherry pick your stat.
Yeah, you can cherry pick your stats, but I mean, let's make it clear. I mean, the winner for this month, of course, was what we saw in the tech space here. At least on the day, you have a Dow Jones Industrial Average. Looks like it's going to close out the day down by about 0.4%, and it's down on the month by about 3%. The S&P 500 down by about 6% here on the day. It's actually slightly higher on the month, but only by about 0.3%. The Nasdaq Composite down 0.6% on the day, but on a monthly basis, up about 6% here, and the Nasdaq 100 up almost 8% on a monthly basis. Meanwhile, the Russell 2000, that was your relative laggard on the day and on the month as well, down here on the day by about 1%, and on a monthly basis, it's down by about 1%.
All right, I know the numbers are settling in, but I'm pulling up the S&P 500 for the month. The top performing name in the S&P, Advanced Micro Devices, up almost 32%. On the downside, you guys were talking about this just shortly ago on air. Advanced Auto Parts down about 42% over the month.
All right, do I need to break these Rich Go headlines? No, let's look first at the breakdown in terms of the industry groups. You had the defensive sectors rising today. Investors were buying utilities, buying healthcare, buying consumer staples, maybe looking for a place to hide out there. They were selling energy, and I think that's on the back of the very bad China data that we got overnight, but they were also selling financials as well as IT stocks.
All right, let's get quickly to some of the gainers because we do have some earnings coming your way. Intel, top of the S&P 500 and NASDAQ 100. Heavy options volume, trading in Intel bonds was more than twice than average to today. Social media postings jumping as well. Gaining after the company's CFO said he expects second quarter revenue to come in at the upper half of the forecast range provided last month. So this was coming at a TD Cowen conference. So shares of Intel just shy of a 5% gain. Twilio, also an outperformer, up 11% today. It's roughly up about, it's had quite a run over the past 3 days. I think I had a run of about 15%. Kathy Wood telling Bloomberg late yesterday that Twilio is among the stocks she expects to eventually grow into the size of NVIDIA. And then you also had the stock up. Activist investor Legion Partners meeting with communication software companies' board of directors, so Twilio's board of directors and managers, to suggest some changes to the board and maybe consider some divestiture. So that's why you're seeing a lot of activity. SoFi, let's go there, up 15% today, on pace, for the best two-day rally since August. A deal to solve the U.S. debt limit crisis, including resuming student loan payments, has given a boost to this name in a big way. Stock up roughly about 50% so far in 2023, so some outperformance there, Matt, as well. What do you got?
Actually, I'm going to pick up the decliners here.
Forgive me.
A lot of weakness in the banks, and so I'm just going to pick out one of them, which is Wells Fargo, losing almost 3% after the CEO, Charlie Scharf, spoke at a conference and said that there's no question there's going to be losses for real estate loans, but the bank is managing its loan portfolio. It's working with borrowers to restructure terms, but nevertheless, you see some weakness there. And we had mentioned Advanced Auto Parts, down 35%, the most since 2004 after a big first quarter miss, and it reduced its full year forecast. This is more specific to AAP's specific management and how they're doing things rather than the overall sector, but its peers like AutoZone and O'Reilly Automotive also lower on the day. And there's an ETF that tracks Turkey, TUR, down 3%, tracking losses in Istanbul. The stock market there had rallied on hopes that President Erdogan's election victory would perhaps lead to more conventional economic policy, maybe the end of let's cut rates to reduce sky-high inflation, but we'll see how that all plays out. That he did promise to put in a new economic team that would have more international credibility.
Let's do a quick pivot away from equities right now and take a look at treasuries. In fact, we're getting the latest data, the latest daily data here on the treasuries cash balance, $37.4 billion as of yesterday here. That's according to data that was just published right now. Of course, this has been fluctuating, but the persistence over the last few days and really last couple of weeks has been below 100 billion as we wait potentially for a House vote at some point tonight, potentially we should say, that would advance that debt deal. As far as the Treasury space goes here, you're taking a look at the yield space, and you did see buying for a second straight day. Yields on the lower end of the curve down about 5 to 6 basis points, and on the longer end of the curve down about 5 basis points or so, guys.
I'm looking, by the way, at a company you may not have heard of, Okta. The ticker is OKTA, application software company. I don't see AI directly in the description.
They do like authentication, like at works and workplaces.
You
and
have
so
heard
forth.
of it in
We've
that
actually had
case.
the CEO on several times.
Got it. Okay, well, first quarter adjusted EPS was 22 cents. That crushes the street's estimate for 12 cents in earnings. Revenue is $518 million. That's a little bit better than the $510 million that we were looking for. And in terms of the forecast, on revenue, they're slightly above the street at 533 versus 528. And on adjusted EPS, they're looking for 21 to 22 cents, which is much higher than the 16 cents the street has expected.
All right, I'm going to take a look at pet food supplier Chewy. Anyone who has a pet knows this company well because you buy at least $50 of pet food to qualify for free shipping. The stock is moving up as first quarter net sales beat analyst estimates, $2.78 billion versus the estimate of $2.73 billion.
A lot of other earnings crossing the wire right now, including Nordstrom and Salesforce. Salesforce earnings coming in for the first quarter here. Adjusted operating income, $2.27 billion. That looks like a slight beat over street estimates of about $2.1 billion. EPS at $1.69. That's a big beat over street estimates of, that's versus a year-over-year number of about 98 cents. Not quite sure what the street estimate was, but it looks like they beat on all of the key metrics here. And here's your outlook going forward here. They're giving a full year revenue guidance of $34.5 to $34.7 billion. The street on average was looking for revenue for the full year of about $34.63 billion.
All right, guys, let's go now to retail. Another retailer reporting, Nordstrom specifically, and this is one that's been under pressure. It's a highly shorted stock, about 22% of the float. As it comes across the Bloomberg, first quarter adjusted EPS, 7 cents a share. The street was looking for an estimated loss of 13 cents a share, so that is better than what the street was forecasting. Still sees fiscal year adjusted EPS of $1.80 to $2.20. The estimate out there on the street is $1.89, so higher on the upper end, and we're seeing some enthusiasm in the after hours trade. It's up about 3%. It's down 5% in 2023, but we're seeing a bump to the upside now, almost a 4% gain. Company also talking about first quarter total revenue. That was slightly better than what the street was expecting, $3.18 billion. The estimate was for $3.12. First quarter net sales, $3.06 billion, $3.05. But anyway, this is a company that's been going through new leadership, some changes, working on a lot at the company, and you're seeing it, some optimism in the after hours.
I do think it's interesting, though. I mean, still, you're talking about net sales down 11, 12% here. So I'm kind of curious as to what's the story beyond just this quarter here. Where's the growth?
Nordstrom Rack, I bet, is what they're going to talk about as we head into a slowdown.
Yeah, it looks like, can I just say, Nordstrom Rack brand net sales, $1.04 billion. The estimate was $1.02, so it does look like maybe a little bit better than forecast.
I just want to point out CrowdStrike is not only out with earnings, they had revenue up to $692 million. The estimate was for $676 million. And the EPS, 57 cents, beating the street's 50-cent estimate. But the stock is down 10% in the after-hours trade. So there's something in the earnings report that Wall Street doesn't like, or it just wasn't good enough. Maybe not enough mentions of AI, but they did have an AI agreement this morning, didn't they? Yes, with AWS.
Yeah, well, I think that growth rate coming down, I mean, that's causing a lot of concerns for a lot of these software companies. People were used to those high growth rates, and that's just not sustainable.
All right, guys, we're definitely seeing some movement. As we mentioned, we've got a rally in Nordstrom in the aftermarket, and Salesforce down right now about 2.6%. So we'll continue to follow that certainly into tomorrow's trade. All right, that's a wrap. Our cross-platform coverage on radio, on TV, on Bloomberg Originals, and of course on YouTube. We will see you again tomorrow, same time, same place for Beyond the Bell, 4 p.m. Wall Street time.
This is Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
All right, everybody. Carol Masser along with Matt Miller. You know Tim is on leave. We're tracking some of the earnings in the after hours. Why did you want to talk about Rich Go?
Because Elon Musk is now the richest man in the world once again. In fact, he's the richest person of any gender. in the world, ahead of Bernard Arnault. That's because Arnault's fortune is tied so closely to Louis Vuitton, Moet Hennessy, and those shares were down 2.7% today in Paris. Tesla shares, on the other hand, were up 2.7% today at the close, and that moves Musk ahead of Arnault. He was down by just about $1.5 billion, but he's going to be catapulting up over that. I think he'll be worth about $195 billion in total after today's close.
All I know is you get to a certain point and it's just more billions.
If you type Rich Go on the Bloomberg, you can get all of this data, and it is pretty fascinating, I think.
All right, we broke down a bunch of earnings. We are waiting for C3 AI to report as well. But in the meantime, we kind of wanted to get into it because everybody has been just nuts when it comes to anything artificial intelligence. C3 AI has definitely been swept up in that AI wave. It's about a $4.4 billion market cap company. Stock is up about more than 250% this year, and it rallied just 33% alone in yesterday's trade. So even when there's a pullback, it's pretty remarkable, some of the moves that we see. So we thought we wanted to get some context on a company like C3 AI, which we don't really talk about except for its market moves. So with us right now is Bloomberg Intelligence Senior Tech Industry Analyst
Mandeep Singh.
Mandeep Singh, sorry. I'm looking at too many different things in our Bloomberg Interactive Brokers studio. Mandeep, thank you. Yeah. So C3 AI, we're waiting for the earnings to come out. They haven't come out. They should any moment. But what is this company?
Well, they are an application software company that is specialized, I think, more on the energy sector. Okay. So what they have done, at least in terms of showcasing the software potential, is focus on a niche segment. They focus on energy customers, Shell, Baker Hughes, and that's almost like 40% of their revenue. I mean, look, they are a $250 million revenue run rate company.
Right.
But the AI element, to me, it's not very clear what's so special in terms of them leveraging AI similar to OpenAI, ChatGPT, or what Google is doing with Bard. It's not a foundational model, a large language model that C3.ai is using. It just has AI in its name. At least that's the way I look at it.
What does it help those energy companies do?
Well, so they provide a cloud platform for them to build their applications. So think of, what Shell may want to do in terms of looking at their footprint of, all the assets they have and leveraging large amounts of data for analytics. That's what all of these companies are doing, is doing analytics. What is new about generative AI is you are using a large language model that you are training using these GPUs, which cost a lot. So for someone
General processing units, right?
Yes. And for C3.ai, which is a small revenue run rate company compared to the hyperscalers that use, a lot of these large language models, it costs about $3 to $5 million to train large language model once. So think of, C3.ai's R&D budget. It's close to $40 million. If it trains these models 10 times, it has exhausted its R&D budget. Wow. And so it's very unlikely that it's going to get into these foundational large language models the way internet and hyperscale companies have. It could build an application that leverages ChatGPT, and that's perfectly fine. Right. I don't think we have heard anything like that yet, which is why, their ticker is so special. So every time you look at the ticker, you're like, oh, this is the way to play AI. And
nope.
It's like when everybody added .com, right, to their names, like way back
when everybody added blockchain to their names.
Yeah. Or cannabis, or...
Oh, cannabis.
Sorry.
Listen, CrowdStrike is the biggest loser in the post-market trade after putting out earnings. But also Okta is down almost 10%. Salesforce is down 5%. All of these software companies are falling hard today, even though, they don't have AI in their names, but they've all made big AI announcements lately, right? CrowdStrike, I noticed, not only this morning did it seal a deal apparently centered on AI applications with Amazon Web Services, but yesterday it said it's introducing generative AI cybersecurity analysts. So what's wrong with these companies?
I think the market is figuring out where do you make real revenue from generative AI. So in the case of NVIDIA, you may argue about the valuation, but at least they raised their guidance by $4 billion for next quarter.
That's
real revenue. Okay. In all these companies,
$4 billion, that's what C3 AI is worth in total.
Right.
And so for all the cloud companies, yes, they can talk about it, but in terms of incremental revenue, and look, there will be some monetization opportunities. It's further out. There will be no incremental revenue in the next 2-3 quarters. And I think that's what the market probably is focusing on right now.
So when Kathy Wood, and forgive me because I don't know if all these companies fall under your world, but Twilio, Teladoc Health, is it UiPath?
Yes.
Citing these are the companies as, that will kind of basically grow into the size potentially of NVIDIA. Do you look at those kind of names as like, okay, these are potentially winners off of AI?
I think
AI?
software is generally a better model because of revenue visibility and the recurring nature. And some of these companies, if they're able to find that perfect use case, you could see them benefiting from that recurring revenue element. But to me, it's too early to call out, okay, it'll be UiPath or it'll be Twilio or anyone else, because right now, we are in the process of, developing foundational large language models. Yes, ChatGPT is probably the best use case we have for generative AI. But on the software side, on the enterprise side, we don't know what will be the use case that everyone is willing to pay for. And it's too early to say, okay, this is the next, $100 billion company because of generative AI.
What do you think generally? I mean, yes, this is the same person who says Tesla is going to trade for $2,000 in a couple of years and Bitcoin's going to be worth $1.5 million a piece.
She's not the only investor who's jumped on the AI train. Let's be
she's
fair.
not. My point is that Kathy Wood exaggerates greatly, or her forecasts are just fantastical, right? So with that grain of salt, what do you think about her statement that hardware companies like NVIDIA, for every $1 of revenue they make, software companies are going to make $8?
Well, so I think, again, there is a lot baked into that, and she's probably looking out 20 years, 30 years out, and maybe that may turn out to be true, but the revenue outlook is too far out. And right now, investors probably are focused on what is immediate, tangible revenue that I can see of a company benefiting from this trend. And those are the hardware makers, the chip makers, probably the memory guys. And that's where I would disagree with Kathy's, analysis around who stands to benefit.
Mandeep, is this akin to some other technological development? Like, how do you guys think about this? Is your world. Do you understand the secret sauce of this kind of thing? Is it similar to, I don't know, something else that we've lived through?
So look at cloud. Cloud came out of nowhere. Everyone was doubtful about.
I always remember the AWS story, the first time we realized what that was about. Anyway,
exactly, but cloud turned out to be a very big opportunity. Now it's a $500 billion market over a span of 15 years. And so this could be very similar in that sense. But even with cloud, it took AWS a good 5-6 years to get, to $1 billion in revenue.
Before they broke it out, right?
Before they broke it out. And so I think it's too early to say that this is, for every cloud, there was a blockchain, there was a Web3 that didn't pan out. So there are no guarantees in this business that, okay, this is the technology. I do agree that generative AI has showed a lot of promise, and you can see the applications, how it can be disruptive. So I'm by no means calling it a fad, but at the same time, I think the revenue opportunities need to be identified beyond what we have seen with NVIDIA and, the chip makers.
Matt's using it to play games right now.
Yes, well, to play Yahtzee
specifically.
Metaverse didn't turn out to be that big of an opportunity. So look,
Not yet.
Not yet, exactly. Yes. It could happen.
Yeah, it could.
With climate change, we're not going to be able to go outside. It's going to be so hot.
Oh, you believe in that?
I totally do, Matthew. I totally do. C3AI, is there anything, just got 15 seconds, should we be looking for, or just?
I mean, they don't break their churn metrics, their retention metrics. That's what they need to convince the street that there is real business and it's helping them, improve their retention.
As we said, about 27% of the float is shorted. So, Mandeep Singh, thank you so much. Senior Tech Industry Analyst at Bloomberg Intelligence in our Interactive Broker Studio. I'm Carol Massar, along with the Yahtzee playing Matt Miller. This is Bloomberg.
facts, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We do check markets all day long at Bloomberg, keeping an eye on Salesforce.com shares. Salesforce sees second quarter revenue in the range of $8.51 billion to $8.53 billion. Estimates have been for $8.49 billion, but after hours, Salesforce shares, they're down now by just about 4.5%. We're also watching cybersecurity company CrowdStrike. It boosted its revenue guidance for the full year. The guidance did beat the average analyst estimate. However, after hours, CrowdStrike shares are now down by 10.2%. It was a down day for the Dow, the S&P, and NASDAQ. It is on to the trading month of June. S&P today down 25 points, a drop today of 0.6%. NASDAQ down 82 points today, a drop of 0.6%. The Russell 2000 down 1%. The Dow lower by 0.4%, down 134 points, extending its year-to-date loss now to 0.7%. 10-year yield 3.63%, with a 2-year 4.39%. Gold up $3.91 the ounce to $19.63, up 0.2%. And West Texas Intermediate crude now with a 68 handle, 68.04, down by 2%. So the trading month of May is behind us. The Dow, the S&P, and NASDAQ all lower today. S&P down 0.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, and just crossing to Lucid said to be raising about $3 billion, including money from the Saudis. So
wow.
Keep an eye on that. We'll talk about that a little bit later.
That's interesting.
All right, right now, though, we want to talk about stuff going on outside the United States, specifically what's going on between Russia and Ukraine. The U.S. and European allies urging caution on whether Ukraine should have the right to strike inside Russia, that amid concerns that a potential escalation could drag them into a broader war. Meantime, you've got President Putin demanding that Russia strengthen air defenses around Moscow after the biggest drone attack on the capital since he ordered the invasion of Ukraine. So let's get the latest and some really thoughtful thinking about the what's going on, at least the latest incidents. A valued voice for us on the war is Angela Stent. She's senior fellow at the Brookings Institution, a former national intelligence officer for Russia and Eurasia at the National Intelligence Council, also served in the Office of Policy Planning at the U.S. Department of State, and her 2019 book, Putin's World, Russia Against the West and With the Rest. She joins us once again on the phone from Washington, D.C. Angela, good to check in with you once again. We've been wanting to since those headlines about the drone attack in Moscow specifically. What do you think about what's going on right now, this war that's been going on for more than a year? What do you think is going on inside the mind of President Putin right now?
So President Putin knows that the Ukrainians have said that they're going to launch a counteroffensive anytime soon. They've been saying that for some time, but we believe they will do that. And so he's clearly very concerned about that. Then you had a few weeks ago a lone drone attack right inside the Kremlin walls. And then yesterday you had these drones that attacked the very posh suburb of Moscow where all the wealthy people live and where Putin himself has one of his official residences. So he must be wondering what the Ukrainians or their supporters have up their sleeves. Next, I mean, the Ukrainians have said that they didn't launch the drones yesterday. We do know that there are also saboteurs inside Russia. Just a few days ago, and it's going on now, we had a group of people who identify themselves as anti-Putin Russians march over the border to Belgorod. And today, the Russians are evacuating children from that border town. So it's really to give the Russians a dose of their own medicine and make them uneasy and not know what's coming in the future. But it must make Putin very angry about this. This, remember, was supposed to be a 3-day war.
So before we go any further with the drone attacks on the Kremlin, I've got to ask you, Angela, about what everyone says when I talk about this, and that is, well, who did the Nord Stream pipeline attack, right? It doesn't make any sense that the Russians would have sabotaged their own pipeline, but also the U.S. doesn't typically operate that way. It wasn't a fantastic job. So who do you think was behind that?
I mean, who knows? There's so much mystery surrounding all of this. I've seen reports in the press here that some governments think that it was a group of Ukrainians or pro-Ukrainians, not government sponsored, but if you like, they were freelancing, that they did that. I don't know whether we'll ever know who did it, but I don't really have any good theories. I mean, if you think the Russians did it, the only reason would be to raise, oil and natural gas prices, but that seems a rather roundabout way of doing it. So I think we don't know now.
As you said, we thought this was going to be a 3-day war. Here we are, 1 year and counting. So
they thought it was going to be a 3-day war.
Yeah, that's right, exactly. And I think the world thought that this was going to come to an end much more quickly. Having said that, how do you figure out, or how do you think about when this might come to an end and what might ultimately bring it to an end?
Well, at the moment, there really does seem to be no end in sight. I think Putin definitely believes that he can outlast the West, that eventually, we'll have elections in the US next year. There are other European countries that will have elections. And in the end, people will say, we can't go on supporting Ukraine like this. We're dealing with inflation. And so we should really rethink that. So that's what he's waiting for. He's waiting for the West to give up on Ukraine, if you like. And then the Ukrainians won't have all those weapons. And so eventually they won't have any choice but to negotiate with Russia on Russia's terms. Now, so far, we haven't seen that happening. The West is still pretty united. 15 months into it, yeah.
I mean, Angela, we're starting to see, especially on the far right, grumblings about why are we funding this war, or at least why are we funding the defense of this democratic nation? Do you think that's going to go further? Does it seem like those in, the Freedom Caucus are going to try and take funding away?
Oh, I'm sure that they will. I mean, so far, I think we have very robust congressional support for Ukraine, mostly. But the people in the Freedom Caucus, the people who are supporters of Donald Trump, think that we shouldn't be supporting Ukraine. Some of those people even think that Russia should be our ally, not Ukraine. And I'm sure as we get into the election season for next year, those voices are going to get louder. And the people who still believe in supporting Ukraine are going to have to come up with very convincing arguments.
What about the people of Russia more broadly? Are they still behind him? We know that there are factions, right, of folks that don't support it. But I'm just curious more broadly, especially if, you now see, the drone attack on Moscow. Is that changing sentiment internally?
Well, I think for those people who believe in the government narrative, then, the drones just shows that it's the aggressive West. So the majority of Russians still appear at least to support this war passively because they have been fed this diet of propaganda that the West and the U.S. is out to get them. Then there are groups in Russia who think that Putin isn't being strict enough with this war, that the Russia should be more extreme in the way that it's treating Ukraine. So he gets criticism from the right as well. But so far, there does not seem to be any kind of a groundswell movement in Russia that's anti-war. Don't forget, 1 million people have already left Russia, many of whom left because they opposed the war.
All right. So in terms of the war on the ground in Ukraine, what are the chances that the Ukrainians can actually make some headway and push the Russians out? Is that even in the cards, or do they need jets and a lot more from the West to do it?
Well, I think people believe that they may be able to push the Russians out of some of the occupied areas in this counteroffensive. But this is only going to be one of what apparently will be a number of different counteroffensives. I don't think anybody thinks for this particular one that will happen soon that they're going to push the Russians out of everything that they occupied, particularly the territories that they already occupied after 2014.
So how do you think about this? I mean, I think I've talked with you before, writing another book and how you're thinking about, Putin going forward in Russia. I'm not wrong. But so, how are you thinking about this?
Well, I'm still looking into what I think will be a very long war. This could go on for a long time, as long as Ukraine gets weapons from the West, because the Russians will get what they need, even if the army has performed certainly below par. At some point, the Russians might be persuaded that it's in their interest to have a ceasefire, but so far they've said that they will only do that if Ukraine accepts all their conditions. And as long as Ukraine is fighting back and as long as it's led by Volodymyr Zelensky, they're not going to do that.
Hey, Angela, who watches this the most closely? China, Taiwan? I'm just curious, North Korea? Who do you think is watching this, especially in terms of how the West reacts with Moscow?
Well, clearly China is watching very carefully because it does affect its own view of maybe the timing on what it does to Taiwan. And then I think probably countries like North Korea are watching this too, just to see how this plays out. But I think China is the one for whom this probably has the most resonance.
North Korea. They're watching it on like an old black and white set with rabbit ears.
It's all right. They're watching. They're watching. Angela, always appreciate you weighing in on this. Be well. Good to check in with Angela Stent, Senior Fellow at the Brookings Institution. Check out our world and her book that's on Putin's world, Russia Against the West and With the Rest, as we said, has served within the U.S. Department of State and the National Intelligence Council. So it really has some great vantage point on Putin himself, but just more broadly when it comes to global policy.
And really not a lot of reason for optimism here, right? As she said, it looks like a war that's going to go on a long time. The Ukrainians don't seem to have the power to push the Russians out, and we know that the Russians have talked about using tactical nukes. So this could be something that goes on for longer and could be a lot more destructive.
Yeah, absolutely. All right, something that certainly is keeping an eye on this, or who is keeping an eye on this, is of course our Nancy Lyons, watching all world and national news. For that, though, let's get an update and head to D.C. Here is Nancy. Hey, Nancy.
Thanks, Carol. President Biden is not quite taking a victory lap on the bill to continue government borrowing, but he is hopeful the proposal will win the majority tonight in the House. Bloomberg's Serve Chapman has more from Washington.
The president spoke before leaving Washington to address the graduating class of the U.S. Air Force Academy.
We're going to deal with the debt ceiling. I think things are going as planned, God willing. Landing in Colorado tonight in preparation for my commencement speech at Air Force Academy tomorrow. And God willing, by the time I land, the House will have acted and we'll be one step closer.
Republican leaders spoke of the gains they made in the deal to reduce future spending, as Democrats suggested they averted the worst. In Washington, Irv Chapman, Bloomberg Radio.
We could see two more Republican presidential candidates enter the race next week. Former Vice President Mike Pence is expected to hold a kickoff event next Wednesday in Des Moines, Iowa, on his 64th birthday. He's also expected to release a video message as part of the launch. And former New Jersey Governor Chris Christie is expected to announce his candidacy next Tuesday in a town hall in New Hampshire. Automatic braking could soon be required on new cars and light trucks. The National Highway Traffic Safety Administration is proposing new regulations on the potentially life-saving automatic emergency braking, or AB systems. Polly Trottenberg is the Deputy Transportation Secretary.
When deployed, AAB systems can potentially bring a vehicle to a complete halt or at least slow them down so that there's significantly less damage on impact.
Trottenberg says she knows it's a curveball for auto manufacturers, but she adds the technology is already well developed and it's time to take it to the next level. 90% of new vehicles already have the automatic braking technology. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. Lots of after-the-bell earnings. We do check markets all day long here at Bloomberg, and we've got you covered on those earnings reports. Nordstrom shares surging after ours. The retail chain's quarterly revenue and profit came in slightly ahead of estimates, but that was enough to send the stock up after ours by roughly 10%. Salesforce out with a disappointing outlook for future sales, raising concerns that its newfound focus on profit may hinder revenue growth. After ours, we got Salesforce down by about 2%. Cybersecurity company CrowdStrike lower after ours on signs of slowing revenue. Cybersecurity company CrowdStrike down now by just about 10%. And sources tell Bloomberg electric vehicle maker Lucid Group is raising about $3 billion, with the majority of the money coming from its Saudi owners. The Dow, the S&P, and NASDAQ all lower today. S&P down 25, a drop of 0.6%. The Dow down 134, down 0.4. NASDAQ down 82, a decline of 0.6%. 10-year yield 3.64%, with a 2-year 4.40%. Gold up 0.2%, 1962 the ounce, and West Texas Intermediate crude down 2.5%, 67.70 for a barrel of WTI. Well, it is on to the trading month of June with May behind us, but what about that old adage, sell in May and go away? Ann Maletti is head of active equity at Allspring Global Investments, and she was our guest right here on Bloomberg Business Week.
If any investors do that, even if it's outside of May, you got to be right twice. You got to be right on the sale and you got to be right on the return. And so I don't think now is the time to leave equities, because it still is a great place. Over history, time would suggest it's still the place where you're going to gain the greatest return.
And again today, stocks lower across the board here, with the S&P slumping 25 points, a drop of 0.6%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master, along with Matthew Miller, live in our Bloomberg Interactive Brokers studio on YouTube and Bloomberg Originals. Hey, I don't know if you saw this data. Home prices up for a second straight month. Buyers coming back to the market, competing over a few homes for sale. The median sale price of a new home dropping around a little bit more than 8% from a year earlier. $420,800, marking the biggest decline since April 2020 and reflecting more purchases of cheaper homes. So the price, though, Matt, bottom line, I guess what I wanted to say just quickly is that it's still beyond the reach for many.
Well, yes. I mean, and if they're moving at all, I think that's interesting, right? Because the problem in the residential housing market has been the buyers can't afford not only the price, but when you throw in the rates, mortgage rates, it puts it way out of the reach of many. And then the sellers aren't willing to drop the price enough to make it affordable. So you haven't been seeing a lot of traffic there.
No, exactly. So let's get to it, though, because our next guest certainly has a great view when it comes to housing. Brendan McCluskey is principal at Trident Builders, joining us on Zoom in Baltimore. Bloomberg Philanthropies, by the way, the philanthropic arm of Bloomberg LP, parent of Bloomberg Media, is providing some support for Trident's efforts. Brendan, nice to have you back and joining Matt and me on this Wednesday. Hey, tell us a little bit about the work that you have been doing and remind our audience and kind of where you are in the process.
Hi, Carol and Matt. So it was great. We caught up about in July of last year when I was at the Goldman Sachs 10,000 Small Business Summit down in Washington, D.C. At the time, we were actually just starting to push dirt at the Smithsonian Environmental Research Center, which is just south of Annapolis, Maryland. We were building what were to be 6 passive house cottages. So basically, as close to net zero energy consuming cottages and dwelling units as possible. Since then, we've completed the project, and we really kind of blew it out of the water what the performance requirements are. The final product of what we delivered there, the houses actually produce 200% of the power they consume day or night.
So more than they actually need, right?
Correct. And they're actually exporting net clean energy at the peak energy load times of the day. So those hottest days in the summertime when all of our air conditioners are working full throttle, that's when they're producing the most clean energy.
It's interesting. Yeah, go on.
No, I was going to say, I want to turn it over to you.
It's interesting that, we talk to builders all the time, and everyone, without exception, over the last, let's say, year and a half, is building homes for the wealthy, or McMansions, as Paul Sweeney likes to call them. And affordable housing is just not there. How does that get solved?
No, it's a great question. Basically, the market has been disincentivized to focus on entry level housing, even for middle class people. Really, it's only the ultra wealthy that they get the biggest bang in the bucket return. What we saw as a real, I guess, innovation in the approach was the adoption of modularized panelized construction. So don't think of this as a trailer. Basically, the same wall panel and configuration of a house can be done, but to a much greater quality in a factory setting. So the quality control and the productivity cost of a factory setting can be applied to the construction industry, which allows us to lower our costs if we're able to do it at scale. And I think that's where we see a real market opportunity in focusing on lower income housing, especially in blighted neighborhoods of Baltimore. So
wait,
we basically have.
Wait. Hang on. Brendan, so the cost of this, is it expensive? Does it, ultimately, what's the financial equation with all of this in terms of what you guys are doing? Obviously, we love kind of the clean energy report, aspect of it, but is it cost a lot more than regular building?
Well, it's just like a factory, right? So, think of building a single Ferrari in a Ferrari factory versus what Ford does with F-150s. The first couple of units, are more expensive on a per unit basis. But you start to meet equilibrium between one and the other around 60 to 70 units. And once you start talking north of 100, each unit cost goes down. So basically all your soft costs in terms of design, architecture, and whatnot get spread across the various projects. And then you're also able to streamline the permitting process and the delivery process. We are, versus conventional renovation of a 100-year-old row home in Baltimore that's falling apart and is covered with lead and asbestos, we're able to do it at price parity, but we're able to do it in about half the time. And that's really where the cost savings are.
And that's what the cost to put up the new structure, right? Does that include the cost of taking down the old structure and getting rid of it?
Well, so the beautiful thing is we're starting out with places where they've already taken down the old structures. So there's a lot of inventory underneath Larry Hogan and as well as now West Moore. A lot of these blighted properties that are vacant and are burnt out, they're knocking them over and they're just creating open vacant lots. So, the easiest, I guess the easiest item apple to pick off is the one that's on the ground. And those are the ones we're going after.
Listen, I think this is so cool. And I always think about building overall, how can it be more efficient? How can it be better for the environment? How do you think about it, Brendan? I love the mission that you guys are doing specifically in terms of affordable housing, but how do we think about it in terms of scaling it up?
Well, so that was actually the big epiphany I had about a month and a half ago. So when we last talked, I was trying to do this as a vertically integrated developer builder. I was trying to, do soup to nuts the entire thing. But it dawned on me that it was taking me an awful lot of time and energy. And honestly, I was just felt like I was talking to a wall sometimes when it came to the city. Then all of a sudden, it dawned on me that there are literally dozens of small urban-sized scale developers that are very much committed to these communities. And they don't want to see them gentrified. They want to see equity built within those communities. It dawned on me that I've got a customer pool. And it was really kind of interesting. I had a conversation with a professor at Johns Hopkins University School of Business. And we more or less convened a meeting a week ago on Monday. And over the course of that meeting, it was really just an exploratory kind of conversation. And, about an hour into it, we all determined okay, this is happening. We're going to form a co-op. And so all of these small urban developers are going to start teaming up together. And frankly, they're going to allow me to build the pipeline and arrange them in a sequential order for us to, assign spots within production runs at the factory and as they can get all their permitting and all the approvals in place. And so we can literally just steamroll all these various neighborhoods across the city in a orderly and planned manner.
That's very cool. So you team up with a bunch of other smaller developers into an organization, and your factory produces the housing that they can put into their own individual communities.
Yeah, it's kind of interesting. To be kind of crazy about it, it's all of us builders are looking for that next $20 to $30 million a year customer, and I kind of invented one.
It's really fascinating. Well, listen, I'm so glad we got to check back in with you. Come back in a few months and let us know how it's all going. It's just great to get an update. Brendan, be well. Brendan McCluskey, he is president of Trident Builders on Zoom from Baltimore. Very cool.
Yeah, very cool indeed. And
affordable housing,
it's a solution that this country really needs right now because nothing's affordable, but housing is just off the charts expensive.
Yeah, it's out of reach for so many Americans. All right, you are listening and watching Bloomberg Business Week. Carol Master, Matt Miller. This is Bloomberg.
company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Salesforce shares are slumping after hours. Salesforce provided a disappointing outlook for future sales, raising concerns that its newfound focus on profit may hinder revenue growth. After hours, Salesforce now down by about 3.5%. CrowdStrike did boost its revenue guidance for the full year, but shares of the cybersecurity stock are lower now by 11.3% after hours. China and the United States are not going to decouple. That is a view from JP Morgan Chase CEO Jamie Dimon, who spoke exclusively to Bloomberg from the sidelines of the JP Morgan China summit in Shanghai.
Over time, yeah, there'll be less trade. You know, it'll take years for these things to take place, but it won't be a decoupling. And the world will go on.
Shares of JP Morgan Chase today down 1.3%. Diamond says JP Morgan does plan to keep its presence in China during both good and bad times ahead. He spoke exclusively to Bloomberg overnight. You can catch the full interview on today's Bloomberg Daybreak podcast, available on Apple, Spotify, the Bloomberg Business app, and anywhere else you get your podcasts. Chevron now has no sell ratings left after JP Morgan Chase upgraded the U.S. oil major. Chevron shares today, though, did fall by 1.6%. ExxonMobil down 1.8%. BP lower today by 3.7%. And those are some of the top company stories we're following for you at this hour. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, everybody, you are listening and watching Bloomberg Business Week on this Wednesday. Carol Messer along with Matthew Miller. More Business Week coming up in just a moment. But first up, let's get another update for you on world and national news. We head back to D.C., our 99.1 newsroom, and Nancy Lyons. Hey, Nance.
Hey, Carol. The debt limit deal heads to a House vote later this evening after squeaking through the House Rules Committee by a 7-6 margin. The nonpartisan Congressional Budget Office estimates the deal would cut deficits by $1.5 trillion over a decade. One item that will not be impacted by the debt deal, though, is aid to Ukraine. Bloomberg's Amy Morris with details.
Sources at the White House tell Bloomberg that any additional military assistance for Ukraine would move through Congress in a supplemental measure that won't be subject to the debt ceiling's caps on federal spending. It is not clear whether or when the White House might ask lawmakers for more Ukraine funding. Administration officials have said that December's $45 billion aid package should be enough money to last until the end of this fiscal year in September. In Washington, I'm Amy Morris, Bloomberg Radio.
The U.S. and European allies are urging caution on whether Ukraine should have the right to strike inside Russia. This follows a series of drone attacks on Moscow buildings. Countries supporting Ukraine are taking varying stances on how it should beat back Moscow's invasion. The U.S. has publicly leaned against the strategy, though, of attacks within Russia. The State Department is calling out China for one of its jets making an extremely close flyby of a U.S. plane. Secretary of State Antony Blinken today pointed out this is apparently a new trend for China.
Our planes were flying in international airspace on a routine mission. Chinese pilot took dangerous action in approaching the plane very, very closely. There have been a series of these actions directed not just at us, but at other countries in recent months.
Blinken says the incident underscores the need for the U.S. and China to maintain communications to prevent miscalculations that could lead to conflict. China says the U.S. should stop its dangerous provocations. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Carol and Matt.
All right, Nancy Lyons, thank you so much. Carol Master along with Matthew Miller. Hey, this story popping up just as of late among the most read on the Bloomberg has to do with Lucid raising about $3 billion and getting some new money from some Saudi owners.
Yeah, and
it's Saudi owners.
I don't think this was entirely unexpected.
According
Certainly
to those
the Saudi involvement wasn't. The Saudi involvement was going to be clear. Either the Saudis had to bail this company out, or Lucid was basically going to go bankrupt. So this is great news for Lucid.
Keeps it going.
Sorry?
Keeps it going.
Keeps it going for sure. I'm just looking at the stock to see GIPO,
yeah,
how it's doing in the after hours. I mean, it should